Hi, my name is Ravi. Welcome to my channel, Payment Talks.
Welcome back. This is video 1 in our 4-part series on the complete ISO 20022 payment lifecycle. Learning ISO 20022 messages without understanding the payment flow is like learning words without understanding a conversation. This series focuses on how messages work together across the complete payment lifecycle. As we are already exploring the individual messages in details, understanding how these messages work together in the payment lifecycle will make every individual message far more meaningful. Today, we cover the foundations and the straight through processing backbone. By the end of this video, you will be able to read any ISO 20022 CBPR plus flow diagram on site, not just this one, any of them. We are going to trace a real cross-border payment through all 14 steps of its happy path, from the moment a customer instructs their bank to the moment the beneficiary is finally credited. This video is built on CBPR Plus, the version of ISO 20022 that actually governs cross-border payment messaging on the SWIFT network only. It is the first of our 4 videos. This one covers the foundations and the happy path. The next 3 covers rejections and cancellations, payments where the payer is a bank instead of a customer, and direct debit. Everything you learn in this video gets reused in every video after it. Before we trace a single payment, we need a shared language. At its simplest, a payment moves value from a debtor to a creditor through their respective banks. Every payment you will ever look at, no matter how complicated it gets, is really just that. The complication and variety scenarios happen in this middle section, which we will uncover through this series. This is another representation of the same payment for our payment flow discussion. The debtor is the paying party, the creditor is the receiving party. The debtor agent is the bank that actually holds the debtor's account, and the creditor agent is the bank that holds the creditor's account. Agent is the word to hold on to here. It means the bank, not the customer. Party is not a bank. It can be individual or corporate. Now, what happens when the debtor agent and the creditor agent do not hold accounts with each other directly? That is where correspondents come in. The sender correspondent and the receiver correspondent are the banks that connect the two agents when they have no direct relationship of their own. And between them sits the PMI, a payment market infrastructure, the clearing or settlement rail the two correspondents may use to actually exchange funds. That is the full canvas. 7 lifelines. Every flow in this series is drawn on exactly these 7. The PMI shows up on every diagram, but it stays in the background on purpose. From a message flow point of view, it is mostly a pass through. It settles the funds between the two correspondents, but it does not usually originate a new message of its own in the chain. We keep it visible so you always know where settlement is actually happening. In our explanation, we kept the PMI in between the sender and receiver correspondence. But in simpler domestic payments, the PMI will be between the debtor and creditor agents. That is, we do not need any intermediary banks. The concept we explain in all the videos can be extended to simpler scenarios where debtor and creditor agents are directly connected to clearing. Every arrow you see from here on is color coded. Red means mandatory for that scenario. This is the backbone the flow is teaching. Black means optional. The black arrow message may or may not happen at all. It may be because of a bilateral arrangement between two banks or simply not required for straight through processing. Running above the correspondent chain is Swift's GPI tracker, giving real time visibility into where a payment stands. Two messages drive it, and they come from the GPI rulebook, not the core ISO 20022 catalog. Track 1 is sent to the tracker by whichever agent has just finished processing its leg. This is made mandatory for CBPR plus flows. Track 2 is what the tracker broadcasts back out to every agent upstream. Track 2 is optional as banks do have another option of GUI, which we look in a while. Traditionally, banks configured the internal payment status using the status report message of PAX2. But now, banks should also consider the payment status to reflect the status from GPI tracker. That's why understanding these messages is very important to understand the full picture of the payment processing. Here is the rule that repeats across every single flow in this series. An agent updates the tracker mandatorily after it has finished its own part of the job. That means it has acknowledged what it received, processed, and forwarded it onward. Hold on to this one. It is going to explain almost everything about the order these messages arrive in. Please note that we are talking about the mandatory tracker update per payment instruction. A bank can send multiple updates as well, like on receipt of the payment and when it needs more time to process the payment instruction. There are some SLAs for sending tracker updates. We will cover all these in depth in GPI series. One more distinction before we move on. Large corporates can also track a payment visually through a tracker GUI. That is a completely different channel from track 001 and track 002, which stay strictly bank to bank. But banks do have the option of the tracker GUI. Now, let's put a real payment on this canvas. Every payment lifecycle has an ideal version of itself, that is straight through processing or STP. Every message is machine processed end to end with no manual intervention at any hop, and nothing gets questioned. This is the backbone every other flow in this series gets measured against. Here is our scenario for the rest of this video. Northwind Traders, the debtor, instructs its bank, the Meridian Bank, the debtor agent, to pay a supplier Ridgeline Supplies, the creditor, who banks with Crestline Bank, the creditor agent. Meridian and Crestline do not hold accounts with each other directly. So the payment routes through Atlas Bank, the sender correspondent, and Harbor Bank, the receiver correspondent, with a PMI, which is any local clearing sitting transparently between them. Keep these six names in mind. We are about to walk every message between them. I will try to use the generic ISO names so that you will always understand using ISO terminology. Step 1. Northwind, the debtor, sends Payno1 to Meridian Bank, the debtor agent. That is the customer's trigger to initiate the payment. We already covered Payno1 in detail in our previous videos. Step 2. Meridian Bank, the debtor agent, responds with Payno to its acknowledgement back to Northwind, confirming the instruction was received, validated, and ready to be processed. Payno 2 is also covered in the previous videos. Rest of the messages that we see in these flows will all be covered at the same details as Payno 1 and Payno 2. Subscribe the channel and follow for the content. These two messages are in the customer to bank interaction space. Step 3. Meridian, the debtor agent, processes the Payno 1 after validations and then creates and sends Paxo 8 to Atlas Bank. The whole validation and creation process of Paxo 8 is explained in detail in the first two parts of the Paxo 8 series. This is the actual interbank payment message, the one carrying the customer's payment obligation from one bank to the next until it reaches the beneficiary's bank. Step 4. And this is the rule worth internalizing early. Immediately after sending that PAX 8, Meridian notifies Northwind with CAMT 54 and that the account has been debited before Atlas Bank has even acknowledged receipt. Why? Because Meridian books its accounting entry the moment it has a network acknowledgement for the Paxo 8, not when it hears back from Atlas. Banks post based on their own control point, the network ACK, never a counterparty's confirmation. This single rule explains a lot of sequencing that would otherwise look out of order across this entire series. We have covered the network acts in detail in our previous video. Please refer to that video. Step 5. Atlas, the next banking chain or sender correspondent, first validates the message from Meridian Bank, and if the message is fine to process further, then may reply to Meridian Bank with PAX2, telling it how the message was processed. This step is optional for STP cases in practice. Many correspondent relationships do not require it for every leg, but acknowledging the receipt of any message is a good, good practice. Step 6. Atlas, the sender correspondent, processes the packsite as intermediary agent and then forwards the packsite to Harbor Bank, the receiver correspondent. Here, the bank will either send directly through a Nostro or Vostro relationship or through the shared PMI, the local clearing. Either is possible based on how these two banks are related or connected to each other. Please note that this particular either or step can happen between any two banks in the chain. From here on, every flow in this series draws this as one arrow between correspondents for simplicity of explanation. Step 7. Now that Atlas has acknowledged the previous leg and forwarded the payment onward, remember the rule. It sends track O1 to the GPI tracker. The tracker immediately broadcasts track 2 back to Meridian, upstream banks in the chain. Here, you need to understand the statuses that tracker sends. Tracker sends mainly three statuses. In the STP scenario, in this step, the bank sends ACSP status with a code. Here, ACSP means pending settlement, which is nothing but the final settlement to beneficiary is not done. All the intermediary banks in STP scenario will send this code only. Step 8. Harbor, the receiver correspondent bank, optionally acknowledges Atlas with PAX2. This is the case when original Paxo 8 is directly sent to the Harbor Bank. In case the payment is passed via local clearing, then the local clearing will send the PAX2 to Atlas Bank. Please note that here the PAX2 is not acknowledgement. This is a settlement confirmation in the local clearing. We already discussed this in detail in clearing and settlement series video 1. Step 9. Harbor processes the PAX8 as intermediary agent and forwards the PAX8 to Crestline Bank. We shall see in detail the intermediary bank processing of PAX8 in the PAX8 series videos. Step 10. Harbor Bank reports to the tracker. Same pattern as before. Acknowledge after validation. Step 8. Process internally. Forward as step 9. Then report as step 10. The tracker broadcasts track 2 to both Atlas and Meridian, the upstream banks of the payment chain. So everyone upstream now has the visibility into this second leg too. Step 11. Crestline, the creditor agent, validates and acknowledges Harbor with PAX2. Step 12. And here is the difference. Crestline is the final agent, the creditor agent. It has no further leg to forward. So once it has acknowledged Harbor, processes internally, and then it reports its status directly. In this STP flow, it credits the beneficiary account and confirms to tracker that payment is complete by the status ACCC. ACCC means the payment is complete and final beneficiary is credited. The tracker broadcasts this all the way back to Harbor, Atlas, and Meridian, all upstream agents involved completing the chain's visibility. Next, step 13. Crestline credits Ridgeline's account and sends CAMT54, the credit notification. Step 14 is sending the statements. Crestline, the creditor agent, eventually sends a CAMT53 statement or CAMT52 intraday statement entry to Ridgeline, the creditor. Similarly, the Meridian Bank, the debtor agent, also sends a CAMT53 statement entry to its customer Northwind, the debtor. That is the full straight through happy path. 14 steps, no exceptions. Let's zoom out because underneath all 14 of those steps is one repeating pattern. Any bank that receives a payment Paxo 8 validates its first internally and tells its sender by Pax 2 that it has taken over the payment. Now the bank processes it internally. After successful process, the bank forwards the payment Pax 8 to the next agent and only then updates the tracker using track 1 or other channels to say it is done with the payment. The final agent breaks the pattern in exactly one way. It credits the beneficiary instead of forwarding, then reports that it finished. Three statement messages get confused constantly. So let's be precise. CAMT54 is an individual notification tied to one specific transaction sent in real time. CAMT52 is an intraday snapshot, an interim report of activity during the day. CAMT53 is the definitive end of day statement, the account's formal record for that business day. The statements or notifications are always sent by the account servicer to the account owner. Please internalize this sentence. Account owner is the entity, can be a bank or retail or corporate customer to whom the account belongs to or the funds in that account are owned by. Account servicer is the bank that holds this account. And one more thing worth knowing, statement reporting is not limited to the two customer facing ends of this chain. CAMT52 and CAMT53 also flow between every account servicing relationship along the way, between Meridian and Atlas, Atlas and Harbor to Crestline, depending on where that relationship exists, even when a diagram does not draw every single one of them. Here, these arrows are shown that statements can flow in any direction based on the pre agreements. Between the banks, it's the nostros and vostros of the correspondent banking. For a retail customer who doesn't have ISO messaging capability, CAMT54's real time role is usually played by something more familiar, an SMS, an email, or an app push notification instead. This is applicable to retail customers only. So, here is the one line to walk away with. STP is not a separate message type, it is the absence of any exception. I know what you are thinking. You would have seen the STP messages separately mentioned like MT103 STP, PAX8 STP, right? But if you closely look into the structure of those messages, they are nothing but the same main messages with additional restrictions. For example, PAX8 STP is nothing but PAX8 with restrictions like no proprietary codes allowed, no name and address allowed for agents, no instruction for agent fields, etc. These restrictions are placed to make sure there are less possibilities that a payment is stopped for processing and validating this information. That is why I term the STP as not a separate message but as absence of any exception. Every message you just saw reappears throughout the rest of this series. What changes later is only what happens when one of these steps does not go as planned. Before we go, a quick reference. In this video, we covered 9 messages: Pain 1, Pain 2, PAX 8, PAX 2, CAMT54, CAMT52, CAMT53, Track 1, and Track 2. Pause here if you want to screenshot this. And two status codes: ACSP, accepted, forwarded, in progress, reported by an intermediary after it acknowledges and forwards, and ACCC, accepted, credit completed, reported by the final agent once the beneficiary has been credited. This is the ideal path when nothing goes wrong. Next time, we cover every way this same payment can actually be rejected, returned, or pulled back mid flight. If this helped you read a flow diagram with more confidence, subscribe so video 2 is there when it lands. See you in the next one. Until then, keep smiling and keep learning.
Thanks for watching this video. If you like this video, please like, subscribe, and share for more such interesting topics on payments.